Today, we're going to be focusing on the fast approaching personal financial year end. In the UK, the personal financial year end runs from the 6th to the 5th of April the following year. It would have been easier if it was the 1st of April to the 31st of March, but here in the United Kingdom, we do like to do things a little bit differently. Are you a contractor? Are you employed or self-employed? Or are you a property investor with a buy-to-let portfolio? If you are, I'm sure that you're going to find this video useful. Hi, welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's podcast of Let's Talk Money and Mortgages, we have Vijay here with us today. Vijay is co-founder and director here at WS Accountancy. Vijay is the go-to person for anything relating to tax and accountancy here at WIS. Hi Vijay, how are you doing today?
I'm very well, Gemma. Thank you. Thanks for having me again.
There's a couple of things coming up, the year end. So tell me, what is the difference between, company financial year end and personal financial year end?
That's a really good question, Gemma, because a lot of people get confused, especially if you own a company with the company financial year end and the personal financial year end. So company financial year end, typically from the day of your incorporation, you get 1 year. So that's your company year end. For example, if you form the company in June, your company year end will be end of June following year, and then onwards will be like 1st of July till 30th of June. And every 5 years, you can either change the company year end to either, extending up to 18 months or shortening the year end minimum up to 6 months. But you can do that every 5 years. The personal financial year end, otherwise, it's, uniform across to everyone. So even if you're employed, even if you're self-employed, even if you're a contractor, even if you're a property owner, everyone gets the same financial year. So that's from 6th of April to 5th of April. As you said, it would have been much easier if it's from 1st of April to 31st of March. But hey, we like to do everything quite different here in UK. So yeah, it starts from 6th of April to 5th of April. So 5th of April is not too far away from today. So it's very important that certain things are done to maximize your tax position by 5th of April.
Right, yeah, because today we're going to be talking about the personal financial year end. There's lots of dates to remember, isn't there? So tell me, the key allowances that everyone needs to ensure that they get done by the 5th of April, what would those be?
So I'm going to cover only like 8 points today, right? Because it's a massive topic on its own. So we will cover 8 key allowances today, and we'll discuss one by one. So we're going to talk about dividend allowance. We're going to talk about personal allowance. We're going to talk about marriage allowance, pension allowance, capital gains allowance, ISA allowance, and gift allowance. So those are the key points we'll try to discuss today.
Okay. Are these allowances like a use it, lose it kind of thing, or can you carry them over? How does it work?
Unfortunately, yes, it is either use it or lose it, except for pensions where you can carry back 3 years. But most of the other allowances, Gemma, as you said, you either use it or lose it. So it's very important you utilize this by 5th of April. Otherwise, it doesn't carry forward or it doesn't accumulate. It's either, you have to use it to get the benefit of these allowances.
Yeah, okay. Well, then I think it's best for us to start at the top. Let's go with dividend allowance. Can you elaborate on this one for us?
Yes, this is quite important if you're a contractor or a person who runs the business via the limited company. Before discussing dividend allowance, I think it's very important to understand dividends. So dividends, when company makes a profit, the company pays the corporation tax. Whatever left is can be distributed to the shareholders. And that's called dividends, right? So effectively it's a double tax because you pay corporation tax from your company point of view and you pay dividend tax top of it. It's only got introduced 6 years ago in 2015. It wasn't the case before, so it's quite new. On dividends, you don't pay any tax on first 2000. And if you're a basic rate taxpayer, you pay 7.5% tax. And if you're a higher taxpayer, you pay 32.5%. And if you're an additional taxpayer, you pay 38.1 tax, right? So it's very important you either, if you're a business owner or a contractor, you utilize the 2000. You also utilize 7.5% because none of them get carried over. So it's very important you look at your numbers. And if you're one of our clients, always email us, or you can look in our dashboard to see what's your dividend, how much you left as dividends in your company. So it's very important you utilize the numbers by 5th of April.
Okay, and now let's talk about the personal allowance. How much is the personal allowance?
So as I said earlier, everyone in UK gets a personal allowance. It's 12,500 at the moment. They're increasing to 12,570 from 6th of
Ooh.
April. Yeah, tell me about it. £70 increase. Everyone gets 12,500 as a tax-free allowance, assuming your income is less than 100,000. Because if your income is above 100,000, you tend to lose your personal allowance. If your income is above 125,000, you do not get any personal allowance, right? So everybody gets a personal allowance. The first 12,500 is tax-free. You do pay a small number of national insurance, but it is tax-free. So it's very important to understand this, especially if you are a property owner and if you have a property just by yourself and you're getting rental income, and if you have a spouse or a partner who does not have any other income, it's worthwhile thinking whether you could own this property jointly, so you can utilize the personal allowance of both of yourself, right? And also, if you're an employed person, sometimes HMRs tend to issue tax code notices which nobody understands. Why so many random tax codes get updated on the payslip. It's very important you check the payslip end of the year and your P60 to see whether you're on 0T tax code. If you're on 0T tax code, that means HMRC hasn't allowed you the personal allowance, which is not right. It's advisable to file a tax return to claim that back. Last year we claimed around £4,000 for one of our clients because he was supposed to on 0T tax code throughout, and until he filed the tax return, he wasn't aware that he was eligible for a personal allowance. So it's very important, you check your P60s, you check your payslip regularly to understand you're on the correct tax codes, etc. Because everybody in UK gets £12,500 allowance.
Okay, good. Thank you. And then marriage allowance. So before starting on this, is it a must that couples need to be married, as the name suggests? Or?
No, it's not. The married couple are allowed to claim this allowance, but if you are on a civil partnership, again, you're eligible for this allowance. So it's just not the married couple. Yeah.
Oh, okay. So who can apply? Who can this apply to?
You can apply if you're born after 1935, and if you're married or if you're on a civil partnership. It's easier to explain this in a example. Say your husband and wife, and your wife works and wife earns more than 25,000, and husband is a stay-at-home dad and earns only 5,000 or whatever. So as I said earlier, the husband has a 12,500 allowance, and he can contribute 1,250 to the wife's allowance. So wife's allowance become, rather than 12,550, it gets 12,500 plus 1,250. So as long as the other partner is a basic rate taxpayer, the other second partner is not utilized in the personal allowance, you can give 1,250 maximum per year to your other partner. So it's very important. Remember, it's a very easy process to apply. You save a significant amount of tax if you do that earlier. I think you can go back a few years if you haven't done it in the past. So it's important to understand these smaller things. Every little helps, right?
Okay. Pension allowance. How much is the pension allowance at the moment?
Before diving into pensions, I just want to highlight I'm an accountant, so I am prohibited from giving any sort of financial advice, but I'm just giving what's out there on the public domain or gov.uk. So personal allowance per person is 40,000 a year, and you can carry back for last 3 years if you haven't utilized it. There's a tapered allowance. So if your income is about 240,000, you tend to lose your 40,000. Every £2 you earn about 240,000, you lose £1 of your personal allowance. So that's important to remember. So you do have pension allowance that's quite generous at the moment. You have a lifetime allowance, so you can contribute up to 1,040,000 for your lifetime. So it's very important you utilize these allowance too, especially if you're a high taxpayer or if you're an umbrella contractor. Again, a lot of people are getting into inside IR35, getting into umbrella contracts. It's very important they utilize this allowance, especially if your income is, say for example, 110,000, 120,000, where you tend to lose your personal allowance. It's better off putting 20,000 into pensions, so you not only you get the benefit of the pension, you also get the personal allowance if your income is less than 100,000, right? So it's very important, especially if you're an umbrella contractor who's switching from outside to inside IR35 rules, to consider this allowance.
So can everyone get the 20% income tax relief on the personal pension contributions?
No is the answer, because especially if you're employed, if you're on an umbrella contract where you tend to contribute from your salary, so you already get the benefit of not tax being not being deducted, right? So you already have the benefit of the tax there. But if you're paying to pension from your personal pocket, so anything from your net salary or any of the income that you have after paying for tax, typically how it works is you pay into your personal pensions, and the pension provider claims 20% relief. And if you're a higher taxpayer, if your income is above 50,000, you can get the additional 20% relief through your self-assessment return. So it's very important to understand these things too, because we had a client who've been paying to personal pensions who never bothered to claim that by a personal tax return. So we've helped him by going back a few years and claiming those reliefs through your tax return. So it's very important if you pay into personal pensions, if you're a higher taxpayer, to claim the additional relief through your self-assessment return.
Yeah, okay. And capital gains allowance. Now, before understanding this, can you just explain, what is the difference between capital gains and other regular income?
Yes, it's a really good question, because HMRC is trying to kind of merge both them together, but we prefer it to be two separate tax items, right? So when I say tax items, so your income tax, as I said, first 12,500, you don't pay any tax, then 20%, 40%, etc. on your regular income. The capital gains is your irregular income. When I say irregular, for example, so you might have bought a buy-to-let property 2 years ago, you decide to sell it now, or you might have bought a shares of one of the companies, a few years ago, you might decide to sell it to get some liquid cash out, right? So when you make money on those things, for example, you bought a buy-to-let property for 100,000, and if you sell that property 2 years down the line for 125,000, that 25,000 profit that you make, it's called capital gains. So on that capital gains, obviously, you don't pay income tax, you pay something called a capital gains tax. So how that worked is first 12,300 is an allowance. So just like the personal allowance, 12,500 for your regular income, for your capital gains, you get 12,300 as an allowance. Anything above, depending on the item, you pay the tax. For example, if you sell a buy-to-let property, if you're a basic rate taxpayer, you pay 18%. If you're a high taxpayer, you pay 28% tax. But if you sell, for example, shares, you pay 10% tax on if you're a basic rate taxpayer, or 20% if you're a high taxpayer. Same applies to cryptocurrencies, right? They are the bigger topic at the moment. So if you sell cryptocurrencies, for example, they come under this at the moment, provided you don't do very regularly. If you do it quite regularly, it becomes a trading income, which means it comes to regular income. As long as you're holding these properties for some time and then selling on a regular basis, it will come under capital gains calculations.
Okay, so capital gains is something that you've bought and then sold and made a profit on. And the allowance is 12,300, is what you said?
That's right. That's right. Yeah, that's right.
Okay.
It's important if you're a property owner, if you have multiple properties, if you have a choice, rather than selling everything at 1 year, you're better off selling it in different years, because you can utilize this allowance in different years.
Definitely. No, that's a good point. So how does it work then? You can carry it over, or you can't carry it over?
Unfortunately, like anything else, you can't carry it over. So, you got to use it or lose it.
Damn it.
So, yeah, you have to use it or lose it, Gemma.
Okay, then. ISA allowances. Just for anyone who doesn't know what the ISA is, can you just let us know what an ISA is?
Yeah, sure. So ISA stands for Individual Savings Account. So pretty much from your net salary, from your income after tax, you can pay into a savings account. And that savings account, you can keep it as an interest earning account. So you can use it as a share trading account, etc. There are different kind of ISAs that people can look up. A lot of your banks promote these products, and any income you earn on that bucket, you don't pay any tax. You don't pay capital gains tax. You don't pay income tax. It's quite a good products to have if you're into savings. It's basically a pot of savings where you can do income earning activities.
Okay, and so what is the ISA allowance for adults and juniors? Because I know juniors get an allowance too, don't they?
So adults, they get a 20,000 allowance per year. For juniors, they get 9,000 allowance per year. So effectively 29,000 if you have a child. Very important, again, to utilize it. And as I said, people assume you can only earn interest on it. That's not true. But you can also have stock ISAs where you can trade on shares too, if you're interested in financial markets, etc. If you'd like to take some kind of risk, you can utilize these options too. And easiest way to get more details about it, just to reach out to the high street bank that you bank with, and they should be able to give more information on this for sure.
I'm smiling because that's the one that I've got, the stocks and shares ISA.
Yeah, there's another one called a lifetime ISA, quite a new product. A lot of people don't know. So that's if you're thinking of buying the house, if you're less than 40 years old, you can pay 4,000 annually, and you get £1,000 from the government. So not only you can use this 4,000 to trade on shares or whatever, and government gives you, £1,000 top of it. So it's a great product to have if you're especially thinking of getting into the property ladder, because you can take that money and pay into, properties and without any other additional taxes. It's a great product to have if you're less than, 40 and thinking of getting into the property ladder.
So what can you do with these ISAs then? They just basically for saving money, right?
Absolutely. So as I said, lifetime ISA you can utilize to property purchases. If you're a first-time buyer, other ISAs, it's just saving products, right? You can either keep it as a interest earning account, or you can use it as a share trading account, and none of the income that earned on those spots, you don't pay any income tax or capital gains tax for that matter.
Nice. Okay, so now we're going to move on to gift allowance. What is this referring to, a gift allowance?
Big topic if you're a older grandparent. So in UK, you pay tax from the adulthood until you die. Even after you die, you pay tax, right? So the tax that you pay after you die is called inheritance tax. So in UK, the allowance for the inheritance tax is £325,000 per person. Basically, if somebody gives you 3,000 worth of anything, it's exempt from tax, right? So if your parent gives you up to £3,000 of either money or gift, it's exempt from tax, and that doesn't count towards the inheritance estate or the pot. When somebody passes, you bring in all the assets and all the gifts that they made in past to work out what's the actual amount they left to be shared among the children or who the beneficiaries are. So if you give 3,000 as a gift, that doesn't come under this inheritance tax calculations. It goes as a gift allowance. So it's, again, if you're good with your parents or in-laws, best time to ask for a gift now.
Yes, fair enough. And one last thing I wanted to just kind of mention, charitable contributions. I feel like a lot of people contribute to charities. And what is the link between the financial year end and charity contributions?
Yeah, so I've got a lot of people who pay into a lot of charities. So when you pay into charity, you get something called a gift aid. Basically, it increases your personal allowance by a slight much. So if you're thinking of paying into any of the UK registered charities, ideal time is now. So you can claim that gift aid through your personal tax return. And again, if you do these contributions, keep a record of it and make sure charities are UK registered charities, and you claim those reliefs through your tax return.
Okay, and is there anything else to kind of bear in mind for the end of the tax year?
We covered quite a lot. A few other things I liked is child benefits. As you know, after 50,000, you are eligible to claim child benefit, and if you between 50 to 60,000, you only are eligible for a part of the child benefit. That's something that you need to be top of. If you looking at your income, whether you're eligible for a child benefit or you are not eligible because a lot of people got redundant because of COVID last year. So you previously would have earned income more than 6,000. Your income had drastically dropped last year, so you might be eligible for child benefits. So just consider that too. And if you add child benefit and if your income is gone above 50,000, just remember you need to pay that back to HMRC, either through your tax return or by calling them. So that's something else that you need to remember. And the other point that I would like to highlight is especially if you have someone who's a property owner or run a property portfolio, it's important that you remember, if you want to do any kind of renovations, etc. If you do it this year, it comes under this year's calculations. If you do it next year, it goes on next year's calculations. So that's something that people tend to do. So you see a lot of building work happening in March time. But if you're a company owner, my suggestion is just wait till 1st of April. There's something called super deduction coming from the budget that we discussed last time. So you can increase your capital allowance by 30% from 1st of April. So hold on to it, because company doesn't come under this personal financial calendar anyway, right? So you're better off waiting till 1st of April if you have properties through your limited company. Yeah, I covered quite a lot. I hope people find it useful, but it's quite much.
Oh, definitely. There's some great points in there, so thank you for sharing that with everybody. I just wanted to put a little reminder out there that these points, they may or may not be applicable to everybody, so just please talk to an accountant if you're unsure about whether these suggestions are suitable for you. If you don't have an accountant, then I will leave our WS contact details below, as we are always happy to help. Thank you again for joining us today. We will be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.